We will start with problem number 8 in the question booklet, page number 72. So this is having some new items on liabilities side. So how to deal with that, we will work it on. There are three partners, X, Y, and Z, sharing profits and losses in the ratio of 3:2:1. Their balance sheet on 31/3/2018 was as follows. Asset side, you're going to find machinery, investments, stock, joint life policy. Joint life policy is an insurance policy taken for all the partners together. That's called joint life policy. If any one of the partner dies, the business will get the policy amount. So that is what joint life policy. It is an asset like a life insurance taken for an individual. It is a life insurance taken for together, all the three partners together. Anything happens to any person, they will be able to get the money. That money will be useful for the individual partners benefit, or all the partners benefit also, because it is in the business paid premium out of business money, the money which comes also for a business purpose only, that is for all the three partners. Then debtors, profit and loss account, cash at bank. So cash at bank will go to bank account, profit and loss account will go to partners capital account debit side, because it is a loss, because it appears on the asset side. So remaining 5 assets from machinery to debtors will be taken in the realization account debit side. Then coming to the capitals on the liability side, what do you find? We'll go to capital accounts. Then you have to see this. This is very important. MRS dot Wise loan. That is Mrs. Wise loan. See here, you have Y as a partner. Here it is Mrs. Y, that is wife of Y. So she is not a partner. So people sometimes think Y's loan is a partner's loan. No, you have to see Mr. or Mrs. You have to be careful. Here assumption, Y is a male. So Mrs. Y's loan is, that is wife of Y. So Mrs. Y's loan is an outsider's money that will come in realization credit side. Even creditors will come to credit side of realization account. The next one is life policy fund. It is like a reserve fund shared among all the partners. Investment fluctuation fund. It is also like a reserve fund for special purposes. So this also is shared among all the three partners in the ratio 3:2:1 in the capital account. So both the funds are going to come in partners capital account. Next, the firm was dissolved on the above date and we have some assets realized. Have a look at it. Joint life policy is surrendered for rupees 12,000 because all the partners are alive. They are closing the business. They're surrendering the insurance policy and collecting the money. So they will not get the book value. Book value here you find 14,000, but the business is getting 12,000 because they're closing early. Next, machinery is realized for 55,000, stock realized 15,000, debtors realized 6,150. So 4 assets are realized. Then in information B, investments are taken over by Mr. Y for 17,500. So 1 asset is taken by one of the partner. Next, C, Mr. Y agrees to discharge his wife's loan. Discharge means pay the wife loan. So Y says to the business, I'll pay the money due to my wife towards the loan. So that will be like a liability taken over. Then D information, it is found that an investment not recorded in the books is worth rupees 3,000. the same is taken over by one of the creditors. This is very important for you to understand. It's a new adjustment. So investment not recorded in the books 3,000. So that has been taken by creditors means the business has handed over the 3,000 rupees worth of investment to creditor. So creditors to be paid 18,500. So 3,000 is given in the form of investment and the remaining money will be paid in cash. That is the meaning of it. Next, expenses of realization amounted to rupees 600. This is a common adjustment which you have seen. So if you have any question, you can ask me. Otherwise, I'll go for working the problem.
So can you explain once again what is investment fluctuation fund?
It is a fund created like reserve fund, kept for the purpose of any changes in the value of investment. When value increases, it is a profit. When the value of investment decreases, it is a loss. To adjust that, so a separate fund is created that is called investment fluctuation fund. The funds are created for various purposes. So this is one kind of a purpose, that is investments are there 20,830. So when the value changes, the profit or loss they will adjust in this fund. That is what they are going to do. That is why this one. So after doing all the adjustments at the end of the business, that is at the time of dissolution, business still have investment fluctuation fund 6,000. It will go to the partners because business is being closed. Remember, all these funds are created out of regular business profits. That is why the money will be shared among all the partners. Even life policy fund is also similar, like reserve fund, special fund, that is to pay the premium of the life policy. So they create a fund. That is what the life policy fund is all about. So page 72, problem number 8, I will take it up and I will start with the realization account. I'm ready with the format. As all of you know, the first step is transferring all the realizable assets to the debit side of realization account. So we'll start from machinery till debtors. We will transfer all the balance sheet values to the debit side. To machinery account, 40,500 to investments account, 20,830. You can see 20,830 investment machinery 40,500. Let me take then stock in trade and joint life policy to stock in trade account, 17,550. Then joint life policy account, 14,000. So we are done with stock and joint life policy. We have to left with only one, that is debtors, 8,700 to debtors account, 8,700. So the remaining two assets, P&L account is a loss debited to partners. Cash at bank value will go to bank account. Coming to the liabilities side, capitals will go to capital account. The next one is Mrs. Wise loan 10,000 and creditors 18,500. both will come to the credit side of realization account by Mrs. Wise loan account, 10,000 by creditors account, 18,500. This life policy fund and insurance fluctuation, investment fluctuation fund will go to partners capital. Next, we have to go for information. The first one, the firm has sold some assets and converted into cash. So first one is A, joint life policy is surrendered for 12,000. All will come under cash at bank. So on the credit side, by bank account, under that, whatever the assets realized, all assets will come therein. Under that, by bank account, because bank is the receiver of money. So debit bank account, credit realization account. So joint life policy surrendered for 12,000. Machinery has been sold and converted into cash, 55,000. Then stock realized 15,000. Debtors realized 6150. So next asset is stock, 15,000. Debtors, 6,150. Next, information B, investments are taken over by Mr. X for 17,500. So asset taken over by a partner. So by X capital account, X is taking over investments at rupees 17,500. Next, Mr. Y agrees to discharge his wife's loan. He will repay. So asset taken over credit side, liability taken over will be on the debit side. 2, Y's account. Under that, Mrs. Y's loan amount. Mrs. Y's loan we have here 10,000. So that I will take it over here. Under debit side, 2, Y's capital account. Under that, Mrs. Y's loan, because Mr. Y is taking the responsibility of paying Y's loan. Next, it was found that an investment not recorded in the books, underline the word not recorded, that is not found in the investment what you have here. In the balance sheet, you have 20,830. That doesn't include this 3,000. That is unaccounted, not recorded. So that one will be given to the creditors. So if it is paid to the creditors, that much money will come down. That much money payable will be coming down. Next is expenses of realization amounted to 600. So there is a payment. The payment will come on the debit side. Realization account debtor to bank account. Realization expenses 600. So there are two liabilities here. One, Mrs. Y's loan that has come here under Y's capital. We are left with now creditors. Creditors, they have not told anything. That means they have been told that creditors will be given the investment. But that is not full payment. So out of 18,500, 3,000 rupees worth of unrecorded investment is therein. That will be given to the creditors. Remaining 15,500 to be paid in cash. to be paid in cash. So that is the one you have to be very much careful about with regard to the creditors. So creditors is 18,500. They have not told pay 15,500, but indirectly they have said that the creditors will be given away 3,000 worth of unrecorded investment. That means the remaining has to be paid in cash or through bank. That is what to be understood here. So with that, all information we have considered, nothing is left here at present. We'll go for checking the assets which are there in the business has realized or not. There are 5 assets earlier. So machinery debit, machinery credit, investment debit, investment credit, stock debit, stock credit, debtors debit, debtors credit. So nothing is left. All 5 assets were there. 4 are converted into cash and 1 has been taken over by one of the partners. So we'll go for totaling now of the assets that has been converted into cash. How much is the money therein? So 12,000 plus 55,000 plus 15,000 plus 6,150, 88,150 total assets realized. Similarly, we have to total the liabilities and expenses paid. Liability paid is 15,500 plus 600, that comes to 16,100 total expenses and liabilities paid. So if you look at the entries, which side is more? So it is looking like credit is more. So rough calculation we have to do in mind, and we have to go for totaling or roughly we have to work with the pencil, write in the pencil totals and check which side is heavier, whether debit or credit. Here the heavier side is credit. So 1,34,150. Take that on the credit side. Now minus all these from 1,34,150. So we get here the balance has 6,470. Here the answer is wrong, 26,470, but it is only 6,470. So this amount to be divided among 3 partners in the ratio. So first for X, 6,470 into 3 by 6. 3,235. Next for Y, the same amount, 6,470 into 2 by 3. 6,470 into 2 by 6. Sorry, 2 by 6. 6,470 into 2 by 6. We get in decimals 2,157. I will take it up. 0.66 it comes. Then Z same 6470 into 1 by 6. So we get here again points. So I will take there 1078. I will not take 0.33, that is 33 paisa. We have to ensure, add all these things. Will it be 6470? We have to check once before we proceed further. Even 1 rupee variation should not be found there. So that is why we have to do the total and check. So if you do the total and check, it is the same
Yes, sir, it's right.
6470. Yeah, we have to check. Even 1 rupee variation, it will not tally at the end. So we have to check. Next, coming to the combined partners capital account. So we have 3 partners. So I have 3 columns therein for this. So always we have to start with by opening balance. That is from a balance sheet. So opening balance means balance sheet value of capitals 30,000, 20,000 and 10,000. You can see 30,000, 20,000 and 10,000 for X, Y and Z. So I'll credit. So 30,000, 20,000, 10,000. Liability shows credit balance. Remember, then we have to go for undistributed profit or loss, that is life policy fund and investment fluctuation fund. Both funds have to be taken to the credit side because both are profit. So by life policy fund in the ratio 3:2:1. So what is the value of life policy fund? If you see 14,000 is there. So 14,000 in 3:2:1 ratio. So 14,000 into 3 by 6, 14,000 into 2 by 6, we get in decimals again, 4,667. Then 14,000 divided by 6 for the other person, that is Z, we get 2,333.33 paisa. So I am eliminating that because less than 0.5, I'm adding this to this. So if you add all the three, it should be 14,000. Remember. So you should not forget that what is the total amount. So 14,000 in 3:2:1. Next is investment fluctuation fund. We have 6,000. 6,000 to be divided in 3:2:1. Again, it is a profit for the partners. So we write on the credit side by investment fluctuation fund, that is rupees 6,000 in 3:2:1. So 3,000, 2,000 and 1,000 will come. Next, we have to look into P&L account. We have it on the asset side. There is a loss. So 1,500 is there. Profit and loss account. That loss has to be debited to partners capital. So to profit and loss account, that has to be shared in again in the same ratio, 3:2:1. So it will be 750, 500 and 250. Again, we have to check by adding all the three, is it the same 1,500 before proceeding further? This is from balance sheet. See, from balance sheet, we have taken 4 values, 3 to the credit side and 1 to the debit side. So there are 4 entries. So this is how we have to do. First, you have to check any unrealized profits are there, any loss is there. We have to debit and credit and debit accordingly, and we have to proceed further. Then transfer entries. So we have here first one by X capital account. So X has taken over investment of 17,600. It comes to the credit side as to realization account, asset taken over. So which person has taken over the asset? Please have a check. X has taken over the asset. So only for X, we will have 17,500, and for Y and Z, no asset taken over. Similarly, we have one debit entry to Y's capital account. He has taken a responsibility of paying his wife's loan of rupees 10,000. So this will come onto the credit side as by realization account, liability taken over only by one partner, that is Y, 10,000 rupees. X has not taken over any, Z has not taken over any. Then we have got a profit here by realization of assets and liabilities, payment. The realization profit, we have to take it to the credit side as by realization account, realization profit. It is for all the three partners. So carefully we have to take from debit side to credit side. We have to ensure at every level whether our calculations are right, are we in the right track or not. So we have taken all the values for all the three partners connected to realization profit. We have to go for balancing now. So we have completed all the entries. So we had to go for balancing. 30, 43, 235. So credit is more here. Remember, carefully total individual partners value. Debit is less. So credit side total first, then find the balance. It is cash paid to individual partners because all the partners have more credit. So 43, 235 minus these two items, 750 and 17,500. Let us see how much it comes. 43, 235 minus two amounts, that is 750 and 17,500. That comes to 24,985. Next, 38,834 minus 500, 38,324. Then 14,411 and minus 250.
14,161.
161. Yeah. Here also we have to check again if especially decimals are there, partial amounts are there, not round figures. We have to check whether the totals are right or wrong. Otherwise, it becomes tough sometime.
Sir?
Now,
Sir, the balance amount is going to cash account. How, sir? Because they've asked for bank account.
yeah, it is a meaning is, yeah, okay. This is, we can make it as bank account because we're preparing a bank account. We can prepare as bank, but it is a cash paid. So we'll prepare a bank account now. To opening balance brought down because it is an asset. So cash at bank 5420, 5420. Then transfer entries for assets realized. We have 88,150. I will take to the debit side. To realization account, assets realized. Then we have two bank account, that is a payments 16,100. So it comes on the credit side by realization account 16,100. So we had two entries of bank, one on credit side, one on debit side. We have transferred. Next, we have to check in capital accounts. In the entire capital account, we have only one bank account, two bank account, that is a cash paid by the business. So we will take that. 24,985 paid to X. Then 38,324 paid to Y. Then 14,161 paid to Z. So we have to check now whether the totals on both the sides are right or wrong. We'll come to know receipts and payments are equal or not. Total on both the sides.
Yes, sir, it's tallying.
Same amount on both the sides, 93,570. That means the amount received by the business has been utilized for payment of liabilities and the partners. So the answer is right for problem number 8, which we have done.